Have you heard about the new tariffs that were just announced in 2025? These tariffs are hitting the Dow Jones stocks hard, and you might be wondering how Apple, General Motors, Nike, and others are reacting. With the trade tensions rising again, let's dive into the top 10 Dow Jones stocks that are most impacted by these changes and what it means for your portfolio this year. President Trump's latest tariff changes are shaking up global markets with new taxes on Chinese imports, Canadian energy exports, and Mexican manufacturing. These tariffs are sending shockwaves through the stock market, especially for companies heavily reliant on foreign materials and supply chains. Let's break down the stocks that are taking the biggest hits and those that may benefit from the changes. Apple is first on the list. With 10% tariffs on Chinese imports, Apple could face increased production costs for their iPhones and other electronics. This will likely impact their profit margins and could push prices higher for consumers. But will Apple's loyal customer base still buy at a premium? Let's see how these tariffs will affect Apple's 2025 performance. Next up is General Motors. GM is especially vulnerable to the 25% tariffs on Canadian and Mexican imports, impacting the cost of steel and aluminum used in automotive manufacturing. Higher production costs could lead to price increases for new vehicles, making it harder to compete in a competitive market. Will these tariffs push GM's stock price down in 2025? Let's dive into how they're managing these increased expenses. Moving on to Nike. Nike's supply chain is deeply tied to Chinese imports, and this tariff means potential price increases for products already in high demand. While Nike has previously shifted production to other countries, this new tariff might still increase cost for their core products. Let's see if Nike's ability to adapt will help them avoid significant price hikes and maintain strong growth in 2025. And what about ExxonMobil? With the 10% tariff on Canadian oil exports, Exxon could see an increase in production costs, particularly in their upstream operations. How does this impact their profitability as they look to expand into new international markets this year? Boeing, the aerospace giant, faces challenges with tariffs on steel and aluminum, which are essential for aircraft production. The 25% tariffs on these materials could increase manufacturing costs, potentially delaying aircraft deliveries and pushing up prices. Will Boeing be able to pass these costs to customers, or will this impact their competitive edge in 2025? Caterpillar, a leader in construction and mining equipment, is exposed to tariffs on raw materials like steel and aluminum. These materials are crucial to Caterpillar's manufacturing process, and higher input costs could lead to price hikes in their heavy machinery. Let's see how Caterpillar plans to mitigate these tariff-related costs and maintain profitability in 2025. Walmart is facing higher prices due to tariffs on consumer goods imported from China. With a broad array of products reliant on international supply chains, these tariffs could increase prices for everyday products. How will Walmart manage its pricing strategy and still maintain a competitive edge in 2025? Intel, the tech giant, is seeing effects from the 10% tariff on Chinese imports, particularly for semiconductor components. This could disrupt the global supply chain and impact Intel's ability to maintain competitive prices for its chips and processors. What does this mean for Intel's stock as we head into 2025? Procter Gamble is another company facing challenges from these tariffs. The new tariffs on raw materials could drive up production costs for household products like cleaning supplies and personal care items. Can Procter & Gamble maintain its price leadership and still grow in 2025? Finally, McDonald's could feel the impact of tariffs on food ingredients and packaging materials. As the global food service leader, McDonald's depends on consistent pricing for raw materials like beef, chicken, and paper products. How will these tariff changes affect costs and profit margins for McDonald's in 2025? As you can see, the latest tariffs in 2025 are having a significant impact on some of the biggest players in the Dow Jones. Whether it's automobiles, technology, or consumer goods, these tariffs are creating both challenges and opportunities for investors. Keep an eye on these stocks as they continue to navigate the evolving trade landscape, and be sure to stay updated on how these tariffs could impact your investments in 2025.